everyone, welcome to the next installment of Charts and Perspective, where we use charts to dive into the world of economics and financial markets. I'm Jennifer Nash, an economic and market research analyst for TMX Verify. Today, we're going to assess the stock market's overall valuation by looking at 4 indicators I update monthly. Let's start by quickly breaking down each of these methods. First, the Crespont PE ratio adjusts for business cycles by looking at the relationship between earnings and GDP. Next, the PE10 ratio is calculated by taking the price of the stock market and dividing it by the 10-year inflation-adjusted average earnings. And finally, the S&P regression trendline examines the index relative to its historical growth trend using an inflation-adjusted trendline of the monthly average of daily closes. Now, despite implementing different methodologies, one thing they all have in common is that they can help us gauge whether the market is over, under, or fairly valued compared to historical norms. By looking at multiple indicators, we get a broader, less volatile perspective than if we just relied on a single one. To simplify comparisons, I've adjusted the 2 PE ratios and the Q ratio to their arithmetic means and the inflation-adjusted S&P composite to its exponential regression. On the vertical axis, you can see how much each metric deviates from its mean. So the big question is the market still overvalued? Looking at this chart, the answer is a resounding yes. But the real question is, by how much? To answer that, take a look at the table in the upper left-hand corner, where we can see how far each indicator is from its respective mean. In August, the Crespont PE ratio was 168% above. The PE10, 114% above. The Q ratio, 114% above. And the inflation-adjusted S&P composite was 187% above its regression trendline. So that puts the market's overvaluation somewhere in the range of 114 to 187%, depending on the indicator. This marks the 4th consecutive month that the overvaluation range has increased, and the range now sits at its highest level in history. Now let's take the average of these 4 indicators and plot it along with standard deviations above and below its mean. Think of the standard deviation as a measure of how spread out the data is. One standard deviation above or below the mean represents what is considered the, quote, normal range. When we move 2 or even 3 standard deviations away, we're looking at significant outliers. And at the end of August, the average stood at 146%, the highest level in history, and over 3 standard deviations above the historical mean. To try and put that into a little less abstract terms, it would be like a person who is 3 standard deviations taller than the average height. They're not just a little bit taller, they are a significant outlier, and you would likely notice them in a crowd. Now I want to provide an alternative view. Let's adjust the Crespont PE, the PE10, and the Q ratio to their geometric means rather than their arithmetic means that we used in the first 2 charts. Think of it this way. The arithmetic mean is like a simple average. You add up all the numbers and divide. The geometric mean is more appropriate for things that grow multiplicatively, like compound interest or market returns, because it smooths out the peaks and valleys more effectively. With this approach, the overvaluation range shifts higher, now between 136% and 197%, depending on the indicator. Again, plotting the average with standard deviations, we see the latest figure at 165% is also over 3 standard deviations above its historical mean. So let's go back to the initial question. Is the market still overvalued? Each of our charts has led to the same conclusion. The market is significantly overvalued, currently sitting at one of the highest levels on record. And to wrap up, I do want to point out that these indicators are not short-term market timing tools. Overvaluation and undervaluation can last for many years, as we see in these charts. Instead, these indicators are more appropriate for formulating expectations for long-term market performance. That's all for our August 2025 market valuation update. Thank you for tuning in. For more economic and market insights, you can find my content regularly on the Advisor Perspectives website under the AP Charts section.